Diving into our multiple choice questions here, let's read our question first. What is the Schedule M1 adjustment on Filler Up's federal income tax return? We're likely going to possibly see permanent, temporary differences. Let's see what the difference between taxable and book income is. We see that we're in accrual basis calendar year C Corp, and we use the allowance method for accounting for bad debts. This is something to be familiar with, where a difference will arise because under the accrual basis of accounting, we use the allowance method, but for tax basis, for cash basis, we use the direct write-off method. Now, the allowance for bad debts was $20,000 at the beginning of the year and $30,000 at the end of the year. During the year, Filler Up wrote off $5,000 of uncollectible receivables and accrued an additional $15,000 of expenses for accounts estimated to be uncollectible. Now, one thing I'll say here also, if that's not, let's say you're not familiar particularly with that is something we do cover, but let's say there's a difference and you're just not familiar with that particular difference. There are ways around it in order to answer the question correctly, such as understanding that accrual basis accounting revenue is recognized when it's earned, or expenses are recognized when they're incurred, as compared to cash basis. Revenues and expenses are recognized generally when the cash flows in or out. So if you read through and you kind of understand the gist of what they're getting at, that could help you significantly. Now, enough of that. Let's dive in and see what we've got. Now, what is going to be on the M1? What's the adjustment to taxable income? Are we going to have a $5,000 increase or decrease to taxable income, or a $10,000 increase or decrease to taxable income? That is a wonderful question, and that's what we're here to find out today. Well, the tax deduction for bad debts is going to be limited to the amount allowed under the direct write-off method. As I mentioned, that's what we use for our IRS rules. Under the allowance method for bad debts, which is used for book purposes, Filler Up recorded how much? They recorded $15,000 in bad debts for accounts estimated to be uncollectible. However, Filler Up is only going to be able to deduct a certain amount under the direct write-off method. Now, what is that? That would be $5,000. And what is the difference here? During the year, they actually wrote off $5,000, meaning it could actually happen, whereas under the allowance method, we have $15,000. So a difference here is going to be $10,000. And as we see that $15,000 was recorded for our book purposes, $5,000 was recorded for our tax purposes, we're going to have a difference of $10,000. Cool, great. That helps us, but we're not done yet, because is that going to be an increase or will that be a decrease in taxable income? If we're going from accrual basis book to tax basis, we've got an additional $10,000 that we are not recording for tax purposes. That's going to actually increase our taxable income. And why is this? Again, it's because this is an expense. For book purposes, we recorded $15,000, but we actually for tax only have $5,000. The difference is a reduction in a deduction, and as such, that will increase our taxable income by $10,000. Let's move on to the next one. Next up, we have an accrual basis C corporation that prepared its financial statements based on a GAAP, and they recorded $800,000 of bad debt expense. The total amount of bad debts that actually became worthless was $930,000. In respect to bad debt expense, what type of disclosure should the corporation show on Schedule M3? Another great question. We're going to dive through it together, talk it through. So in our example, we see that per GAAP, we had $800,000, but what actually happened was $930,000. We know we're going to likely deal with $130,000 of difference, and we do see that in multiple of the situations. This will be something that I eliminate is letter D because, yeah, we're going to have a difference here. What type of disclosure are we going to have here? Well, are we going to have a temporary difference? Are we going to have a permanent difference or a temporary difference? Let's assess that first. Is it temporary or permanent? Well, I'm going to say it's temporary because, A, you can memorize the temporary or permanent differences, but also B, let's think about this logically. AR, what is a permanent difference? That's something that is arbitrarily created. The rules, the IRS says you can't deduct penalties. That will always be a permanent difference. However, depreciation, the ways that we write off accounts receivable, these are all going to end up being the same amount in, let's say, a 10-year period. Even if year to year they're different, at the end of the day, at the end of a multi-year period, they will be the same. So it's not going to be permanent. So do a little process of elimination there. Leaves us with letter A and C, and the difference is here, in which tax deductions exceed book deductions, and then, or is it book deductions that exceed tax deductions? Well, these are both deductions. And if we just look at these normally, what's the case? Well, it looks like our tax deductions are higher than book. As such, I'm going to go with letter A. That's our final answer. Another great question down. Thank you all for joining as always, and I'll see you in the next one. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of cpa.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.